Hey, what's up, stock compounders? Brad here. So I am back in my space. It feels so good. And we're going to do a Q&A session tonight. AMA Ask Me Anything. Pabrai says he'll basically cover any questions other than what he's currently holding in his portfolio. But it was hilarious. I don't know if you guys saw in his latest talk at London Business School, somebody asked him about Alibaba. And he said, I'm going to duck that question. But then he actually gave some information about Alibaba and what he's doing with it. So, maybe nothing is off limits for Pabrai. We'll see if you guys find anything off limits for me today here. Let's jump into the Q&A. Have you done any more research into Shinnikin? The REIT should allow the company to increase the amount new builds, and I love the look of the growth in recurring revenue. Cheers. So Alex, I haven't looked at all into Shinnikin since I bought a little bit a few months ago. Might have been a few months ago. I have two small kids. Time is completely distorted. I have no idea how long ago it was, but no, I haven't looked any more at Shinnikin since then. So it will, though, be interesting to see how this REIT plays out for Shinnikin. Next question. In your shameless cloning portfolio, what are the strategies you use for selling? For example, when a guru sells 15% of the position, do you sell 15% or do you approach it differently? Great question. So I approach it differently. I think Pabrai actually sold out 15% of Micron in the last 13F filing. I haven't touched my Micron position. Basically, the way I look at it, if a guru sells more than 50% of the position, and that guru had a big impact on me entering the position, then I seriously have to think about whether it's worth selling or not at that point. So that's kind of my hurdle rate, is at least 50% sell off. So 15% doesn't faze me too much. Could just be some kind of shifting around for tax purposes or redemptions. There's a lot of different reasons a fund manager might sell off small portions of a position. 50% or more is what I'm looking for. Warren highly recommends learning accounting in and out with the understanding of the nuances before you're ready to pick stocks yourself. I don't have an accounting background and believe you don't either. Have you taught yourself accounting in good depth? What have you read, pursued? Have you read Security Analysis by Ben Graham, which expects good hold of accounting? Great questions there. So it's true. I did take an accounting class in college. I actually started in the School of Business at UW-Madison, later shifted to the engineering program. But for me, it's really been, I've learned accounting through being really interested in a business, seeing, reading great write-ups on that business, and kind of reverse engineering what those investors were seeing in the business by digging into the financial statements. So it definitely was not a formal approach to accounting. It's more of a piece it together approach is the one that I took. There's just a ton of information online about accounting. There's a number of good books. I think the interpretation of financial statements, I've heard is one that people often reference. But yeah, for me, it's just been kind of patching it together through, studying businesses. So, I find accounting very boring, learning it kind of from a bottom-up method through an accounting course or a program. So I've just found that's the way that has worked for me. I've read parts of Security Analysis. I even downloaded it on Audible. It is so dry for me. So I didn't make it too far through security analysis, but for anybody who's really passionate about, learning how to invest and analyze securities, it is the gold standard. So for what that's worth. Legendary investors, including Druckenmiller, Tudor Jones, and Dalio, invested in Bitcoin. Is there anyone you would follow into Bitcoin? Well, to be perfectly honest, and I think I've mentioned this before, I do own some Bitcoin, okay? Back in 2018, after Bitcoin came crashing down from $20,000 per Bitcoin, I bought some, okay? I did not see it as an investment. I put only an amount of money into it that I was comfortable losing completely. I bought Bitcoin. I bought 4 other cryptos. It was like a kind of a basket of cryptocurrencies that I bought, and I've held them to this day. I plan to hold them for another decade or more. So, I do see a small possibility that, Bitcoin and the few others that I added, that I bought, could have asymmetric upside. So that was the play there. Is there anyone I would follow into Bitcoin? I don't think so. I mean, I have a little bit. It's enough for me. I don't need more. So I'm pretty comfortable with my current Bitcoin position. How have the markets generally reacted since Joe Biden became president of the U.S.? Our market in Australia seems to be powering on nicely at the moment. Should we be cautious? Cheers. The markets, how have they reacted? Well, it's hard to know if the markets are reacting to Biden or, there's so many different things that go into the markets, right? So I don't pretend to have any superior wisdom when it comes to, this is why the market did this on any particular day or week or month. I think that's largely a fool's errand. And I don't really pay attention too much to the macro environment. As Pabrai, as Buffett say, it's really all about the business, right? Finding these great businesses that are available at reasonable prices, and that's how you invest. So that's the approach I've taken. But since that time when Biden was sworn into office, the market's been on a roll, right? It was on a roll before that, but it's continued to be on a roll. So again, I don't know what that's reacting to, but there's definitely some things to be optimistic about with things opening up, starting to open up in the U.S. Post-pandemic. I just flew to the Midwest last week and flew back to California, so it's clear that things are coming closer to back to normal. So that should be a boon for the economy, I would think. So that's kind of my 2 cents on that. Should we be cautious? It's hard to say. It's a very interesting time in the market that we're in right now. So I think there's always a place for caution for any investor, unless things couldn't get worse, right? Unless we're clearly at a point of maximum pessimism, then it's probably not the time for caution. But I don't think we're at the time of maximum pessimism right now in the markets, okay? There's still a lot of people who are buying, right? Buying in the markets. So I think there's always a place for caution and for, understanding your downside on any given investment. Any insights on what happens when a stock goes to zero bankrupt? Ever happened to you? I have never. So I owned a stock through my Magic Formula portfolio called Garrett Motion. And it filed for bankruptcy. Okay, so as a result of that, I think I bought it at like $5 something per share. I think it dropped down into the $1 and change per share, if I remember correctly. But interestingly enough, the stock jumped back up higher even than when I bought it. It's up now, I think, at like $6.20 per share. Okay, so I think that's a bit of an unusual situation for a company to declare bankruptcy and then for a stock to rebound like that. One of the signs I think that may have happened, or one of the signs that an investor in Garrett Motion could have seen, is that there were a lot of actually pretty popular super investors buying into Garrett Motion shortly after it filed for bankruptcy. Oaktree was buying in. I believe Seth Klarman was buying in. So it was a very interesting situation there. But typically, if the stock goes to zero, again, it's never happened to me personally, so I can't speak from firsthand experience. But I mean, you just lose all of your money in that particular investment. You lick your wounds and hopefully you learn something from it and you move on. So that's about all I got for that one. Did you already look into the other Chinese spawners? Tencent, including Naspers and Prosus, Baidu, JD.com. I have not dug deeply into those. I did kind of take a look at Naspers a little bit. I tweeted something about how, it seemed like Naspers has a market cap of around 91 billion and owns about 315 billion in its investment portfolio. So I was intrigued by that delta. I think it was like a 71% discount from net asset value. But haven't dug into Tencent, Baidu, or JD. Actually, just today, I was listening to a podcast about Pinduoduo, okay, PDD in China. Really fascinating story. I mean, I think it's a company that's gotten from 0 to 100 billion market cap faster than any other company. Okay, I think it took like 3 years or something like that. And I found out the founder of PDD actually had the charity lunch with Warren Buffett 1 year before Mohnish, Pabrai, and Guy Spear had that charity lunch where they bid like $650,000 for lunch with Warren Buffett. So really interesting. Maybe I will link to that podcast in the description so you guys can check it out if you're interested. But I don't think Baba will be my last investment in China. Okay, it's a pretty interesting economy to bet on, in my opinion. Got some tailwinds. SRG, are there prospects from known investors about shorter term gains in the stock price? I believe one investor you mentioned thinks it could get to 60 in a couple of years or so. That vaguely rings a bell, 60. I don't remember who said that. Yeah, I don't know. I think in the short term, it could be a very rocky ride for SRG. The redevelopments of the properties that Seritage is really targeting in some of these prime locations, they just take time, right? They take 3 years, 5 years, maybe even longer before kind of they're fully up and running, generating that NOI. So I don't know. I think in the short term, it's kind of a crapshoot for SRG. I think if you're not willing to hold it for at least 5 years, you should probably just take a pass. So that's my take on SRG. I'm neither accounting or finance student. No problems there. How can I learn the accounting for business evaluation? How did you learn? So similar question to the one earlier. An online resource that I just thought of, Aswath Damodaran, is a professor at NYU. He has a YouTube channel. He puts out a ton of great free content. I think you could even go to his webpage, aswathdamodaran.com, or maybe damodaran.com. And there's just a ton of free resources on there to learn about how to analyze financial statements. So that's one resource, but there's just an endless supply of resources on accounting out there. Thanks for the quality content. Absolutely. What is your take on the role of management when evaluating a company? On one side, some reputable investors say buy companies that even an idiot can run because someday an idiot will run that company. True. On the other side, also reputable investors stress the vital role of management because they are capital allocators, and we need to trust them that they will have shareholders' interests in mind when making decisions, and long-term mindset. Yeah, I think management is a huge part of most investments. Okay, when you're considering investing in a business, owning a piece of that business, it's usually critical to evaluate management. And Pabrai was just talking about this in his last talk at London Business School. And he says, it's probably best not to go and visit with management, okay, to actually talk to management, which a lot of us, we're not going to have a problem with that. We probably couldn't get an appointment, right, with the manager of companies that we're looking at investing in. But Pabrai says it's probably even a bad idea for, big investors who can meet with management to do that. And the reason is, in order to get to those higher level management positions in public companies, those people are very charismatic. They're great salespeople. They really understand how to, build rapport and connect with people. They're very likable, okay? And if we're trying to evaluate a business, we don't want to fall under that spell of this very charismatic, very intelligent person who understands this business probably more than just about anyone else, okay? They're going to sell us, right? It's in their DNA to sell us, and we're probably going to take the bait rather than rationally look at the business prospects and whether or not it's a good investment. So that's, and Pabrai says the best way to judge management is to look at their track record, right? Look, what did they say they were going to do in previous annual reports? And what did they end up doing? Okay, did things pan out? If they didn't pan out, did they own up to it, or did they make excuses, right? So that's one way to evaluate management. There aren't many companies that an idiot can run that are available at a compelling price, I would say, to make it a good investment. It's pretty rare that these kinds of companies can be bought where it's a good investment. Are there any listed closed-end funds you follow that have similar fee structure to the old Buffett partnership and have decent performance that you have come across? I'm tempted to buy some Berkshire, but wondering if there was something similar I should also investigate. Thanks so much for your channel and time. Boy, yeah, it's tough to beat Berkshire when it comes to, that fee structure with the closed-end fund. Ackman comes to mind, but again, there are performance fees associated with Pershing Square. Markel comes to mind. Fairfax Financial come to mind. So that there's some alternatives to Berkshire Hathaway, but frankly, I don't think they're as good. So if I wanted to invest in something like that, I would probably just buy Berkshire. But I wouldn't buy Berkshire at any price. I would have a target price for Berkshire, and I would wait until that target price was hit. What would be your concentration diversification approach following a market crash? Ooh, I like that question. Say all the companies on your wish list suddenly went on sale. Would you be open to a more diversified approach or focus on 5 big positions as you do right now? Yeah, that's an interesting question. I don't know the answer to that right offhand. I do see the value in Here's the thing. In a market crash, I guess it depends how much time I have, right, to do things within that market crash. If we rewind to March 2020, why does this keep popping up? If we rewind to March 2020, that happened so fast. It was like a flash crash, okay? So in that case, I'd want to get into those 5 big positions, right? Can I move this thing? Whereas, if I had some time, if like there was a crash and then there's a prolonged recovery, I may be more tempted to buy some baskets of things. I've heard that Pabrai has done that before, where he sees an industry that he knows has just gotten decimated, and he thinks there's a very high probability that that industry will recover, but he doesn't know which companies in that industry will kind of recover best. Or maybe he just doesn't know enough about the businesses in that niche to pick the winners. So it's possible that I would do something like that. Yeah, it's an interesting question. I'm not sure. I would probably just stick with maybe between 5 and 10 bets, and plow into what was obvious to me during that crash. But it's an interesting question. Biggest investing mistake of commission, not omission, and what did you learn from it? I did a video not too long ago with PunchCard. Okay, PunchCard. I'm with 4 other YouTubers. And we actually did a video exactly about this, our biggest investing mistakes. I believe I talked about... No, it wasn't omission. So the investing mistake I made, I bought Apple back in, I believe it was 2016. Okay, I think I got in before Buffett bought the majority of his stake. It wasn't a clone of Buffett either. It was something, I think I saw it on the Magic Formula. I was like, wow, Apple is in the top 30 in the Magic Formula. That seems weird. It seems like way too good of a company to be on the Magic Formula screener. So I bought Apple. Of course, I'm an Apple user. I've had an iPhone for a long time. I'm recording this on a MacBook Air. So the mistake I made, I didn't have the framework yet of buying and holding. You make money not by buying or selling, but by holding. I didn't have that. So I think like a year later, I sold out of Apple. I think it went up like 50% or something. Patted myself on the back and went about my business. What a mistake, right? So what I learned was, it really drills in this lesson of, buy businesses that you want to own for decades, right? And then actually own them for decades. It's something that very few people do. And it's, one of the best ways that I can think of to get an edge in investing is to buy and hold for the long term. Exercise that extreme patience. How do you go about understanding the company business model or even a sector other than going through financial reports, since all the things in understanding are not in plain, simple, bold words outlined to you? Yeah, it's a good question. One of the things I like to do for this is to, read write-ups from other smart investors. Okay, you can find these Value Investors Club. Lately, I've been using Twitter a lot, where you can just go and you can search for the ticker in Twitter. There's a lot of places to find smart write-ups on different companies. So that's one way to do it. And read the annual report. Some businesses you can really get a good handle on by reading the annual report. Another thing to do is read letters from other investors, right? Fund managers often put their letters to investors out to the public. Those are awesome things to read. When will you be getting a bust of Mohnish Pabrai to put in the background of your videos? That is a fantastic question. When will I do that? I think after I have lunch with Mohnish Pabrai, after I meet the man in person, that's probably about the time that I will have a bust of Mohnish Pabrai made. So, yeah, that's a fun question. I like that one. Have you looked at PCYO? Fits the spawner specification, low debt, and lots of land. I've looked a little bit at PCYO. It came up in corner of Berkshire and Fairfax. That's something that people were buying in there. I think it's the one out of Colorado, land development, water utility kind of thing. I just couldn't quite wrap my head around it. I couldn't see how it's going to be a 10-bagger in the next 10 years. So took a pass. But, I did spend a little bit of time on it. Besides insider ownership, if you could pick a company based on only one metric, what metric would that be? One metric. Well, it'd be a qualitative metric, which you might not be crazy about, but it would be, how much do I trust the CEO to create value over the next couple decades? In terms of integrity and skill, right, of the CEO. So that's the metric. Not something you're going to be able to look up, but that's what I'd be asking myself. What is the most important thing you changed your mind about in the past year? Boy, these are tough questions to answer on the fly. I'm going to have to come back to that if I still have time at the end. Hope you're doing well. I am. Do you believe that the super investors have hedged their positions against a crash? If yes, is that hedging depicted in the 13F in some way? I think a lot of the super investors that I follow, who are, kind of following Buffett, don't hedge. I know Mohnish Pabrai doesn't hedge. We saw Bill Ackman does do some hedging from time to time. I'm pretty sure Michael Burry does quite a bit of hedging. But, I don't think it's really something that we can track through 13F filings typically. So it's not something that I really pay attention to. And, I think Mohnish Pabrai would say any kind of hedging, when you're doing that, you're not really focusing on, what really moves the needle over the long run, right? Hitting these base hits, as Pabrai would say, of buying right and holding, putting your money on a great business, right? A great management team, and letting them do the work. So much of this hedging involves timing that's very difficult to do well. So possibly there's a number of super investors that I follow who do hedging, but I don't really think I have much ability to see what those hedges are. And again, I think it's unnecessarily complex when you get into some of these hedging strategies. I think probably most investors would be better served to really just focus on, buying well and trusting that in the long run, things are going to work out. If you've got that framework, that process, that investment process that has worked, right? Has proven over the years. How would you value a holding company? Do you think using NAV is the best way? What are your thoughts on Exor in Italy? Yeah, Exor is interesting. I just found out that Chris Meyer, author of 100 Baggers, has a position in Exor. Yeah, to me it seems like the best way to value a holding company is to use NAV. There's probably going to be a discount to NAV that's built in. I think Pershing Square usually has somewhere around a 20% discount to NAV in the stock price. Part of that is that Ackman charges those performance fees, not just performance fees, but management fees, right? Fees for breathing. So that's going to be built into that discount. But Exor, I haven't looked much into Exor. But yeah, it seems interesting. It's a little larger than what I'm targeting, right? I'm really looking for sub 1 billion market cap companies. Exor, I'm pretty sure is higher than 10 billion. So it doesn't mean it can't be a great investment, but it's just not really in my sweet spot for what I'm looking at. Can you list your 3 to 5 highest company convictions as of today? If you buy and forget a stock, how much capital do you think is the best bang for the buck if you have high conviction in a company? Well, to me, it wouldn't be about capital per se. It would be about, what percentage of your portfolio is in that company. I can't speak about 10, 25K, 100K without knowing, what is the full pie. That's the way I think about it, is percentages. But if you really like a company and you want to own it for decades, Pabrai would say, maybe 3 to 5 positions, as few as 3 to 5 positions is just fine. So can you list your 3 to 5 highest company convictions? No. I'm really still digging into some smaller opportunities. I'm not buying anything at the moment. So I don't really have any companies other than Alibaba that I anticipate holding for more than a decade. So I guess I would have to say Alibaba would be at the top. And I'm constantly looking for more opportunities that I have that high conviction around. But to be honest, it's kind of a tough time in the market. I'm finding to uncover those long-term opportunities. So Warren hasn't explicitly compared S&P and Berkshire in performance and never asked investors to consider Berkshire over S&P. That is for sure. He has definitely not done that. Would you agree it's better to buy Berkshire over S&P over the long term, assuming higher volatility? What CAGR to expect from Berkshire? Is there a good source to find trustworthy valuation of Berkshire Hathaway? Does Warren talk about current value of Berkshire in his annual letters, or has he shared indicators on how to value Berkshire? Yeah, Warren, I don't think would ever come right out and say what he thinks Berkshire is worth. I've heard from some other smart investors that fair value of Berkshire Hathaway is probably somewhere around 1.3 times book value. It seems like a reasonable estimate of fair value to me. So this question about comparing Berkshire to S&P, I think it's better to buy Berkshire over the S&P depending on where each are at, right? Certainly the S&P gets frothy and the S&P gets cheap. Same with Berkshire Hathaway. So you've got to know, what is that? What is the compass there, right? What is fair value for each of those? And there's ways to compute fair value for each of these companies. I just talked about Berkshire. Aswath Damadran has done some videos talking about, how would you come up with a fair value for the S&P 500? So that could be something to dig into. I don't really care about volatility. I think volatility, for a long-term investor, higher volatility really just provides us more opportunities to buy low and sell high. So as long as you're buying because you understand the value of something, not because, the price is going up, right? And so that gets you excited to buy in. If you're buying for the right reasons, volatility can really be a bonus as an investor. So I don't really consider that. Compound annual growth rate to expect from Berkshire, I have no idea. I mean, you'd have to take into consideration where it's at today in terms of valuation. And, I'm tempted to guess that Berkshire over the next decade or two will outperform the S&P 500, but I wouldn't put money on that. It's just my gut. And then there's, who is it? Christopher Bloomstrand of Semper Augustus has done quite a bit of work on Berkshire Hathaway. I think in his last letter to investors, which is available publicly, he did quite a deep dive on Berkshire Hathaway. So check that out. Is Markel a better compounder than the S&P index from today? Which one do you like better, Berkshire or Markel? What is your opinion? Personally, I like Berkshire Hathaway better. But, I think, a prudent investor is going to look at each of those and really try to value it and ask yourself, what does this company look like in 10 years, given, the team and the opportunities available, what industries they're kind of most heavily focused on. So there's some work to do. I think it's important to do that work. These are difficult questions for me to answer. But I do I would buy Berkshire before Markel. What are your current holdings? Which do you think is a buy at current price? So I'll give you guys my big 3 holdings. Okay, most of you know what they are already. Micron, Seritage Growth Properties, and Alibaba. Okay, those are my 3 kind of core holdings. Which is a buy at current price? I think Alibaba is probably a buy. This is not investment advice, but you look at the people who are in Alibaba. If you go to Dataroma, you type in Baba in the upper right and you hit enter, you can see the super investors who have bought into Alibaba recently. And it is a who's who in the value investing world. So it's really hard to argue with that. As a shameless cloner, it was a pretty easy buy decision for me. So that's it. I don't think Micron is a buy. And I wouldn't necessarily be buying into Seritage at, I think, around $19 per share, something around there, which is where I think it's at today. Clone the process or clone the outcome? Well, I think the only way to clone the outcome is to clone the process. That's I'm not sure how to interpret that other than that right there. What value creates smart investing for society at large, in your opinion? Well, patience, I would say, right? Those who value patience are going to buy things that they want to own or are comfortable owning for a long time. And I think that means you have to be thoughtful about what you're buying, right? If you're planning to hold something for a decade or two, you're going to really spend some time on vetting those investment opportunities, which leads, I think, to smart investing. What do you think about activist investment? Wow, that's a lot of questions. What do you think about activist investment, and is that something for you? No, I do not want to be an activist investor. I want to be a passive investor. Less work. Is sentiment, game theory, and perception important for you? What do you think about sleuthing? For each outperforming trade, there needs to be an underperforming trade, and maybe for each outperforming investor, there need to be several to many underperforming investors. Yeah, I'll tackle that last question. It's funny. This is something that was brought up in Lee Lu's last Q&A at Columbia with Bruce Greenwald. And Bruce Greenwald, at one point, he said, you know, investing is a zero-sum game. If someone, I think this, I might not be quoting him exactly right here, but he was saying, you know, when people make money, right, there's an equal loss for someone else, something along those lines. And Lee Lu said, yeah, I don't completely agree with you, but you were my professor, so I'm not going to argue with you, something to that effect. So, yeah, I think in general that makes sense. But, you know, the big caveat there, it's like when you go to a casino, right? And you play at a roulette wheel, and there's a zero and there's a double zero. And if someone lands on those, zero or double zero, that's the house, right? The house wins. So there's an edge, right? And when you get into the stock market, you got to understand, you know, there's a house, right? There's a house edge. That's any fees that you're paying. Transaction fees, you know, whatever those are. ADRs often have fees, right? So you got to understand that it's not exactly a zero-sum game between investing participants, right? There's kind of big players. IPOs, you think of all the fees that go into initial public offerings that these investment banks collect. So not exactly. Can you explain in simple terms how do we calculate earnings yield? Mentioned in book that still beats the market. Yeah, the little book that still beats the market. Earnings yield. So it's a little more complicated the way that Joel Greenblatt calculates it, and there's some footnotes in that book that go a little bit more into earnings yield. But the idea behind earnings yield is what is the company earning in 1 year compared to what it would take to buy the whole business, okay? And what it would take to buy the whole business is something called enterprise value, okay? So that's typically all of the equity You add in all of the debt, okay? Because if you're going to buy a whole business, you've got to pay off not only the shareholders, but you've got to pay off the debt holders. And then you also get the cash, right? So you would add the equity, you would add the debt, you would subtract out the cash, and then there's, you know, minority interests and other things to take into consideration. But those are the kind of the big three pieces: the equity, the debt, and the cash, which is the enterprise value effectively. And then you just look at, you know, what percentage is 1 year of earnings compared to that enterprise value. So that's earnings yield. Pizza or pasta? Tom, that is the most thoughtful question I've had today in this Q&A. Wonderful. Pizza, hands down. Not only pizza, but Chicago-style pizza, deep dish pizza. I want like an inch of cheese, okay? I want a crispy crust, nice golden, flaky crust that kind of wraps up. It's like this bowl, right, for this deep dish pizza. Then I want an inch of melted cheese. I want pepperoni on there. And then I want maybe 3/4 of an inch of chunky tomato sauce. That is the bee's knees for me. So pizza all the way. All right, guys, that is it for today's Q&A. Thank you all for the thoughtful questions. And with that, I will see you all in the next video. Take care.